The following is an update and technical analysis on the U.S. equity markets, followed by Apple based upon the daily interval in which I will deep dive into the U.S. Tech 100 futures, honing into the hourly interval, ultimately covering two other additional trade ideas in ZIM Shipping Integrated and Take Two Entertainment. And on the 20th of December 2023, we were trading spot price 195.40, where we had initially put in a beautiful, clean divergent high. We had negative and bearish divergences really constructed on all four technical momentum indicators right off of a rising bearish wedge pattern with major reactionary lows to help strengthen the validity of that key inflection point. We had a breakdown, we had a potential breakdown, we had a nice clean back test really to the button, honing in on 191.79, price support 189 and 187. And here's the update. And the entirety of the trade based upon that back test and or retest bottom of that primary reactionary uptrend line, we just melted right through all key price support levels. That was good for a 7% crash to the downside, ultimately undercutting the 50-day and 50 exponential moving average, additionally with the 187.34 price support. And this is the big line in the sand that I have left off the 181.65 price support that I have added. And it is highly correlated with the weekly time interval with major reactionary highs and lows really across the entire sphere here. Some short sellers and or bear traders to be covering around that key inflection point if and when we come across that key pivotal juncture. We had some big headlines that rocked the U.S. equity market space, starting off with Israel's headlines, disappointing construction spending data, and a bleak December manufacturing PMI, hinting that the start of 2024 may not be as optimistic as anticipated. Treasury yields really rose across the entire board, particularly at the short end of the curve, with energy markets experiencing a notable shift, with crude oil initially surging due to Middle East tensions, but later plummeting right around the open, even after the news of Israel's actions in Beirut. And I believe there are some key manufacturing headlines that the charts once again created. I've added that new key pivotal inflection point around the 181.65 price support, in which will more than likely come into confluence if and when we drag down that far, back down and undercut, maybe a potential backtest and or retest the 187.34 price resistance, called a duo line of price resistance. We believe the previous reactionary lows may be the trick. If we go on to take and erase that previous reactionary low, you will ultimately be testing the zero line thresholds on the daily time frame within the moving average convergence in the oscillators, with already infused red candle close printing below the zero line threshold within the oscillator histogram. Damage, without a doubt, is being poured into the top component, the number one market cap company in the world, and it will drag the rest of the stock market if and when it goes. Taking you to the US Tech 100 off the daily interval, and we have a breakdown sell signal within the daily time frame as of now. Nice, clean, divergent high, big bullish falling wedge pattern, and we have completely taken that level out and really to button right off the 16,447 price support that had a major reactionary low and a big, almost a 0.6% right into the close, especially if you're an active and or day trader, netted you close to 0.7% there. And that was a key inflection point that was successfully defended by long traders and or bull traders as of now. We have a confirmed bearish crossover in the moving average convergence, going on to potentially tested zero line thresholds with an already crashing stochastics 1033 down below that additional key inflection point. Make no mistake about it, the 16,447 will be the ultimate line in the sand if and when we take that level out. Long traders, bull traders never get the counter trend, snapback, rally, right back into the primary reactionary uptrend line, which would add to your existing short trades position, if not an entry, on a great risk reward short trade setup to the downside if and when long traders and or bull traders take the back test scenario. If we undercut this previous reactionary low similar to Apple, we will have a prolonged move and a big move down to the downside, re-challenging a primary reactionary downtrend line off the 2021 major reactionary highs. And that will be the line in the sand, bigger line in the sand, in confluence of the 50-day moving average, an additional 16,002 price support down below. And that was a big turning point with major reactionary highs really across the entire sphere there. And that was a big key inflection point. Long traders and bull traders took out to backtest and was off to the races right below, gunning into the new year there. I would only suspect some big moves if and when we go on to undercut the 16,447 price support. Zooming into the US Tech 100 16-minute time frame. And we had, again, nice, clean, reactionary highs right across the 16,544 price support. And once we put in that major reactionary sell signal, was off to the races, and the entirety of that move was good for a 2.5% crash to the downside, as negative and bearish divergences had only continued to construct on a much larger scope and bigger magnitude, where we had that additional first sell signal. We had that first sell signal, which was preceded with a major straight line down drop, only to have a strong counter trend snapback rally based upon this inverted parabolic uptrend line which was taken out. And as I had continued to hype and harp up a potential head and shoulder classic looking top at the split of the neckline, big sell signal there, and was off to the races in a big move to the downside, only reflecting off of some key transitioning price support levels. Taking you out to Take Two Interactive Software, where I had mentioned in that previous video how it was a potential short trade, nice clean trade idea. We had been in a consolidation phase since that key inflection point. Here off the weekly interval, we have a nice clean divergent high. We have negative and bearish divergences that are beginning to construct on a much larger time frame. And upon zooming you in upon that daily time frame and interval, we had again larger scopes of these negative and bearish divergences that only continue to construct and establish. And this, in my opinion, is a backtest and or retest breakdown sell signal. We, of course, not the solid red candle infused close that I would have liked to have gotten. We did have some minor reaction right back off that key inflection point, which was close to the bottom of that gap support. But that is, again, just the potential beginning stages of a breakdown. When you have clean, confirmed negative and bearish divergences here on the daily time frame and constructing on the much larger outer layers of these time frames and intervals, you're going to increase the odds as the longer term time frames usually overpower the near term. With red infused candle closes below the zero line threshold in the oscillator histogram, I remain adamant for any pullback, any snapback, any counter trend snapback rally would offer an additional, which is another 2.6, close to 3% move to the upside, and an additional add-on to your existing short trade position, if not an entry to a short trade risk-reward ratio, down to the first target at 153.82 for 6.5% crash in confluence of the 50 exponential moving average, ultimately down to the 145.82 for an 11% crash, and then down to the 143.41, which will come in confluence of the 200-day moving average in the primary reactionary uptrend line, and an ultimate challenging of the biggest key inflection point that Take Two will have seen in over a year, with major reactionary lows off of January and the 200-day moving average and 143.41 price support and gap support down at the 136.55 price range. That would offer the utmost, most great, valuable risk-reward ratio long trade setup to the upside, only gearing up for one of the biggest, most anticipated products that Take Two Software Entertainment has released in over a decade. Taking you out to ZIM, integrated shipping services based upon the daily interval, and we had some additional big headlines rock the entire industrial sector and shipping and port sector, where Maersk, the second largest global ocean carrier, in a comment with my subscriber that we had just mentioned, took a risk by relying on the Operation Prosperity Guardian for secure Red Sea passage, but this gamble has proven unsuccessful. Consequently, Maersk has decided to indefinitely, here on Tuesday, suspend Red Sea transits, opting to reroute ships around Africa's Cape of Good Hope, and the heightened military activity within the Red Sea has triggered a surge in container shipping spot rates and has impacted certain container shipping stocks to surge to the upside, and talk about, once again, charts manufacturing the headlines off a backtest and or retest. I had mentioned a 3 outside up bullish continuation pattern. We broke out of that key inflection point, backtested, had a great risk reward short long trade setup to the upside, had a beautiful day trade here right off this key inflection point, which was good for that move, which was 7.5% big move to the upside, pulled back on an additional backtest of this major reactionary downtrend line with major reactionary highs really across the entire sphere here. Call it multi-year price support, and that was bid really to the button here. And the entirety of that trade so far has been good for 20.3% gains to the upside, with target 1 at 12.57 price support for an additional 33% in gains, which will come in confluence of dual price resistance with the 200 and 200 exponential moving average, 13.36 for 39 and or 40% in gains, ultimately up to 16.14 if we ultimately take that level out. 68% in gains to the upside, where you have the oscillator completely shearing to the upside, negating the bearish crossover that was looming, giving me the heightened feel of a potential falling inside up bullish continuation pattern.